So welcome guys again to this YouTube channel. I have been away for a little. For this week I've not been on the charts, but starting from today, tomorrow, I'll be on the charts, and I will be posting like daily about this strategy for those who want to learn, for those who want to follow it. I will be posting daily and consistent, because in this game all you have to do, all you have to have first is consistency and discipline. So I will be applying those also to this YouTube channel, because I know this strategy will help some of the people, and even if it will not help you, you'll grasp one or two things in my videos, and they will also help you in one way or the other. So what I want us to do today is, because for this week I've not been active, I want us to go through that whole week, the like backtest the week, see if we would have gotten any trade, if we would have been active in that week. Okay, so I will mark our Monday. Monday is here, yeah, that bullish candle, blue candle. That is where we will start backtest up to there. So last week before I went, I had seen something. I had seen that on this weekly time frame, we had an order block. Okay, let me mark it. So we had a 1 hour fair value gap here. So that means that first maybe we had a 1 hour point of interest, that is liquidity. Then price came back to the 1 hour fair value gap. Then we printed out a bearish engulfing candle, a bearish 1 hour engulfing candle after tapping into the 1 hour fair value gap. So that means at 20.00 we would have had the opportunity to get a re-entry for this sale. And remember, our main point of interest is this liquidity. So where do you go? To the 15-minute time frame. Okay, for the beginners, please remember you first have to go to my YouTube channel. Then you look for the video that explains my strategy, because you can't understand this if you haven't gone through my strategy. You'll not be understanding why I went from the 4-hour time frame, then I went from the to the 1 hour time frame, then the 15-minute time frame. You will be on the dark. So I highly would like you first to go to the video, the channel, and then look for that video. It is very clearly indicated there. So on this 1 hour fair value gap, what happened? Price came, had a change of character, okay, and then what was left? We were left with a breaker block, okay. With a breaker, that is a 15-minute breaker. So price would go up to the breaker, and then it would reject price to sell. So at 20.00 you can see what price did, came back to the breaker. So that would have been our entry. Let us see our stop loss above our high, our 15-minute high, 129 pips. Then our target to be on the liquidity zone, the weekly liquidity zone, that is 400 pips. Risk reward ratio of 3.1:3.23. That was a good trade. So Asian session on Monday morning would have had that trade. So where do we go next? We go to New York session. I will also make a video of the rules that I have on this strategy, so that you cannot be maybe over trading. You cannot be going through those emotional struggles because finding yourself trading your emotions, yet you have a very, very good strategy. Okay, so let us go back to the 4 hour time frame. Okay, let us go to the daily time frame and see the bigger picture. So you can see we first on that Asian session we came and swept liquidity. Okay, then on the 4 hour, that means we should look for a bullish bias. If we have any point of interest to support buyers, then we should go with it, because right now we are not looking to sell more, we are looking for a buy opportunity. Okay, so let me mark daily and weekly. Okay, so if we have a trade that will be a buy, then our target should be sorry, what is this? Then our first target should be at this 4 hour fair value gap, because you don't know if it will reverse price or it will let price pass through it and violate it. Okay, so let us go to the 1 hour time frame and see what was happening. So on 1 hour time frame, see what was happening. Price came, violated this 1 hour not fair value gap but order block. You can see it violated this order block, yet it had some reaction, but then it violated it because candles closed above it. Okay, and you can see this is our 8 a.m. So what then had happened after the violation? Price had come to this zone, nobody closed above this high, but then we had formed a 1 hour order block here that was supporting price. So confirming that we can still continue on buying. Okay, so what should we now do? And then I think we should also consider the fact that we would have had news at this week. So and remember, we don't trade news. So I will let me get inside my forex factory and then see if we had any news on those days. This was Monday 18, Monday 18, yeah, Monday 18. Okay, there was only a bank holiday, and that was on card. So there was no other news. So this day was a perfect day to trade. So after being confirmed to us by this 1 hour engulfing candle, and you can also see that it violated this 1 hour order block, then we can go to the 15-minute time frame and look if we can get an entry there, a buy entry. Okay, let us see. Let us see what happened. So this is our 8 a.m. candle, and there is something that I want you to remember. Okay, I think I posted it on a video called like the gold secrets that nobody tells you about. So after this 1 hour candle engulfed us, okay, where did it go? It a price went up, okay, but then it didn't break with the body. Okay, it went up and swept at 1 hour liquidity. And so what did I tell you about the 1 hour and 15 minute secret on gold? So I told you that if you have a trade and then price goes and sweeps a 1 hour liquidity, okay, where should it then go back? Where should be your entry? You should go to the 15-minute order time frame and look for a good 15-minute order block that head was formed and magnitude was shown after it was formed, and then that should be your entry. So let us get into the 15-minute time frame and see if we'll get that, because already we have swept what a 1 hour liquidity. Uh, you should not ignore that. Okay, so you can see what happened. This was the 1 hour liquidity that I was showing you, but definitely on the 15-minute time frame, you will see that candles are closing above. So someone would have come and entered at this point, but this isn't my strategy yet. Oh yes, it will. The trade would have still put him or her into profits, but this is not the strategy I'm trading. So I should wait for price to come back to this 15-minute order block, okay, and then I can get an entry there. Okay, so price went up, but then it retraced and tapped into our 15-minute order block. Let me mark it. We formed a daily fair value gap, and we know what, if price respects a daily point of interest, where should we target next? If we have a trade there, we should target a daily point of interest also. So if price respected this daily fair value gap, then definitely our target would have been at a daily liquidity or a daily order block or a daily fair value gap. So at this zone, we should look if we have any point of interest to resist price well. If what price tells us, if we will violate this fair value gap, all will respect it. Okay, so let us go to the 4 hour time frame. Okay, so and we still had a 4 hour fair value gap here. So what happened? You can see price came, tapped into the 4 hour fair value gap, but then this candle, this 4 hour candle, had not printed out when the Asian session was starting. So we should go to the 1 hour time frame and see now what was happening. And you can also see that the moment we printed out this bearish 4 hour candle, this 4 hour bullish candle didn't engulf it. So it's like price is losing momentum. Buyers are being outtaken in the market. So what was happening on the 1 hour time frame? So on the 1 hour, price came, swept our high, took liquidity, tapped into the 4 hour fair value gap, then it printed out a bearish, very bearish 1 hour engulfing candle. Let me mark it. I'm somehow struggling with my talking, but it will be well. So at 20:00, we printed out a bearish engulfing candle. And remember, this was a daily fair value gap. Okay, so what do we now need to see? Like, we wouldn't have bought at this zone, so that is the reason why we waited for a 1 hour candle to print, so that we can know if you are still buying or we can now start selling. And also at this zone, you will see that we had a break of structure there, and a 1 hour bullish 1 hour order block Then at this zone, we had a fair value gap, 1 hour fair value gap. Okay, so let me mark them because they might be important to us. So because the 4 hour candle at that time it looked like it would respect like the this high, and also the 1 hour time frame has also respected this. You can see the candle that has formed. Then we can now go to the 15-minute time frame and look if we can get a sell setup, and which should be our main point of interest after getting the sell setup. It should be our liquidity, our daily liquidity, because we have already tapped into the daily point of interest. Therefore, we should target our daily liquidity. So let us go into the 15-minute time frame. And remember, if we tapped into the 1 hour order block, price should push us back to 1 hour 15 minute, not 1 hour 15 minute candle, but a 15-minute order block, okay, or a 15-minute good point of interest that we can use to get into the trade. So at 2100, you can see price was still printing out bearish candles, but we didn't have a 15-minute good order block like our strategy suggests that that would have been our entry. You can see price still went on printing bearish candles, and so I don't think that on Asian session would have a trade, because if this was a 1 hour favor block and this was a 1 hour order block, then our strategy suggests that we should have had a 15-minute order block so that price would have come, tapped into the fair value 1 hour fair value gap, then come back to our 15-minute order block, and then would have had our entry there. Okay, let me put it well for you. Okay, tap yeah, then is our main point of interest to go at. So therefore, we still have a bearish bias. So let us go to the 1 hour time frame and see what was happening. So on 1 hour time frame, you can see this, this 1 hour order block had already been violated. Yes, it had some reaction, but at this point we had already violated it. Like a 1 hour bearish candle had already came and printed out, and it had printed out in such a way that it violates this 1 hour order block, by which way it had closed below this 1 hour order block. And then what did we have again? We had a 1 hour order block that had been printed out at this zone here. 1 hour order block, let me mark it. Hour bullish engulfing candle. So where do we go next? We go to the 15-minute time frame and see if we will get a good hot, a good point of interest to support our bias. And then what happened? No, let me mark. Let me know first where the 1 hour bullish engulfing candle formed at. So it formed at 1100. So we should wait for. We should look for any point of interest after 1100. So 1100. It formed at 1100. So therefore, okay, it formed at 1100. Okay, so we should look for an entry at 1200. Okay, because at 1100, that is where it printed out a bullish engulfing candle. So where should be our entry after 1200? Okay, And if you can see what was happening here at 11:00, before 11:00, we had a 15-minute order block here. Okay. Yes, it had been respected by price and pushed higher, formed that 1 hour engulfing candle. But then I really don't think that we would just have come and took this 15-minute order block as our support center and then took the trade at that zone. That wouldn't have been a good idea. Because of what? Because we don't have any change of character here, okay, or even a break of structure. And then there is no that big magnitude. There is no that huge magnitude for buyers. So this would have looked like a consolidation. You can see there is not that good 15-minute order block that we have been using on the other trades that we have been taking. And maybe someone would have said, let me just risk it. Okay, so if we would have risked that, definitely would have been stopped out. Okay, so this wasn't a very good trade that I would have taken. So I will not even list it on my trades. Okay, so after that, I think we should go to Wednesday Asian session. Let me mark it and see what would happen there. Remember the Asian session, we trade from 2000 to 0000. Okay, so let us go back to the daily time frame and see what had happened. So on daily time frame, you can see we had gone into the daily fair value gap, that is on Tuesday. Then we had come and swept our daily liquidity. Okay, and there was so much selling pressure at this zone. Then let us go to the 4-hour time frame. On the 4-hour time frame, what did we have? Price still had come, swept our daily liquidity, still printing out bearish candles. Okay, so and at this zone also, this was a good point of interest to mark. We had a 4-hour fair value gap. Let me mark it. A 4. Okay, so if price came and pushed to this 4-hour fair value gap, and then we didn't have any good point of interest to support it here, then we would have come back to sweep another liquidity here. So let us then go to the 1-hour time frame and see what was happening still. I want you to understand price, not cramming a pattern, but understanding price little by little. So on the 1-hour time frame, what did we have? We had a 1-hour order block at this zone, and you can see what happened at 2000. Price came and pushed through this 1-hour order block. Okay, so we can now get into the 1-hour time frame and see what was also happening there. All together? Yeah. Yeah. So at this 1-hour time frame, first see, we had a 1-hour order block here. Okay, so we will have been very keen on this daily order block, because remember, it has possibilities of doing either two things: be violated or push price to a daily point of interest. And which is our daily point of interest that is only visible here? It is only this daily liquidity again. Okay, let me mark using this. It is only that. Okay, so if we respect this, then we must go back again to this zone so that we can get some point of interest to push us higher. Okay, so let us go to the 4-hour time frame and see what was happening. So you can see price had printed out very bullish engulfing candles, 4-hour bullish engulfing candles. They seemed to have magnitude. And then we had a 4-hour order block here. Okay, we had a very bearish engulfing candle. Let me get it out. Where do we expect price to be pushed back to? We expect price to be pushed back to on a 4-hour point of interest again, which is a 4-hour. They didn't engulf this candle, so we still have some selling momentum in place. And you can also see this was also let's say a 1-hour order book that was left in position. So let us go to the 15-minute time frame and see if we'll have any opportunity. Then there is something I've not shown you. So as you can see, after this 1-hour candles swept liquidity, you can see price came, printed out a bearish engulfing candle, and then at this zone it just swept the previous 1-hour candle, 1-hour liquidity. Okay, so if we have a 15-minute time frame, 15-minute order block here, point of interest, then it should be able to support price to sell. Okay, so let us go, and you can clearly see here we had a very good 15-minute order block at this zone. Actually, this was a very nice setup, I must say. Nice setup. So where should have been our entry? We should have come on that 15-minute order block, our sell entry, a very good stop loss, that is 39 pips, approximately 40 pips. Okay, and then your sell setup is there. Okay, for those who don't want to hold a lot, okay, the first TP would have been at this zone, that is at reward ratio of approximately 1:6. Another person would have put the TP at this zone, risk reward ratio of 1:11, and another one at this low. It just depends on your personality. If you are someone that can be able to hold more, or if you are not able to hold a lot, then you can still target your small pips, your few pips, and then it is good. A risk 1:6 is very high, very high. It is a few people who catch moves like those ones. So, and you can see it was a very good week. You can see how many trades we had. 1, 2, 3, 4, 5. Five very good trades, 5 accurate trades, A plus setups. Okay, and all the trades were with a risk reward ratio of above 1:3. This is 1:3. This is 1:5. This is 1:4. 1:20. That is if price comes to this point of interest that we are projecting it to come to, and 1:6 for those who only held for Friday. So that was a good week. We didn't trade every day, but we took opportunity of the few trades that came on our way. If our strategy told us sell, then we sold. Okay, and this is how it should be. Discipline, consistency, and hard work. It will pay. Okay, Hard works come in through backtesting. Discipline, that is through waiting, following your strategy, and consistency, showing up each and every day. Even if you got a loss yesterday, you should show up today. Okay? So that is how the week would have been. So I will be posting consistently from tomorrow the trades that I will take, all those we would have taken, and all I will want you to do is to share, like, and subscribe so that we can build a community. For those who want to be taught like the basics, what you can find me on a personal level. If you comment down below, I will always reach out to you. Okay, so thank you. Have a great day.